This is your 3-monthly silver chart with the HVF draw and the $333 target, which will be the first in a new trend, which means it will actually overperform that on all balance of probabilities, whilst possibly having a bit of a rest at those levels. It's also told you before, and we've covered this before, that around the 90 levels you'll probably rest. You may technically run the 100 and pull back, so that could be something like that, for example, and then a winding up period over here before we go even higher. You could even do some form of a return move and have a bit of volatility before you calm down at these levels, the 4,200 and the 4,206, very close to each other, likely to be run simultaneously, before running and heading back up and making a marginally higher high. I'd prefer we didn't make a marginally higher high. Maybe these necklines will be a tiny bit lower so that you just get up to the similar levels where you might have a rest. However, at the moment, the way we've done it, it points to 4,400, which is a tiny bit higher than the highs here. The high there was 4,381.
francishunt breaks down the 3-month silver chart, highlighting key targets and trend behavior. He notes the $333 level as the first significant milestone in the new trend, suggesting that silver is likely to overperform this target while pausing briefly around the 90 level for consolidation. Hunt explains that a move toward 100 is possible, followed by a short-term pullback before resuming the upward trajectory. While minor adjustments in highs and necklines are expected, the overall trend points to a continued bullish move. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
This is your 3-monthly silver chart with the HVF draw and the $333 target, which will be the first in a new trend, which means it will actually overperform that on all balance of probabilities, whilst possibly having a bit of a rest at those levels. It's also told you before, and we've covered this before, that around the 90 levels you'll probably rest. You may technically run the 100 and pull back, so that could be something like that, for example, and then a winding up period over here before we go even higher. This is going to be a big debasement fiat part of the trade. Of course, that's already begun. It already triggered. You know that from the $30 move that started there, that's run our first target. Now, this could have pulled back to the first interim. It could have even pulled back all the way to the funnel and still been a very legitimate, and it may still do that if we were to have a chronic demand destroying event. But the overall journey path is up here for the 90s before running the 333s for silver, and on the same time frame, nice and perky from the silver. In fact, it's already gone past its, and I would say silver is due. It's due for that silver ratio to start flipping. Let's go down, go down, go down, go down. This is very strong from silver, I would say, and you're getting to. It's a slightly chunkier. Again, I will draw this. Let's see if we did. We might have already done it on this broker. There you go. A little bit of a neckline here. Again, complex right shoulder, left shoulder. Final capitulation head made the 46. Made the 46. Breakout on the neckline, very clear. And making it already to the next neckline. By the way, that's a $50 price for silver. Hello, you're back in the 50s for silver. Please pay attention. Please pay attention. There was the head and shoulder that was called and drawn. We saw this break with momentum. We had a feeling that you would then have to run that low, which you did. Nice invert. There is an inverted HVF in there, believe it or not, and that gave you the low of that wick too in that left shoulder. But now it's about upside, and silver is moving briskly and is back in the 50s. Congratulations, back in the 50s. That makes that worth quite some muchos dineros. 50 times 100 ounces, that's okay. And you can stack many more of those. They stack nicely on top of each other. It's like Lego for adults. You know, it's like, it's not too difficult, a Lego program, I have to say. It's not going to be super intellectually challenging, but it's kind of satisfying. Clink, clink, clink. Yep, you can do it. Use our friends. Pure gold below. below. Use bullion vault for stacking internet gold, especially if you're considering a move. It's fully backed, it's not hypothecated. You could technically have a deliverer, it's just kind of expensive. You can reserve specific bars with numbers. My personal suggestion, don't add to your cost at all. Have internet gold there, and if you're moving, you're changing borders, you sell and you buy physical locally where you are moving to. Let's just show you the master of it all, the gold, on a similar time frame, just so that you can see why you might have had a little bit of a rest. People just want things that go up all the time. All the time doesn't happen. There you can see gold, how disproportionately quickly it has been going up, and this is all the fuss. That's the top callers right there in that tiny little pink circle. Yep, you will also have noted that you kind of have the potential for a little bit of a cup and handle there. I'm not a massive fan of that framing. It is a traditional technical analysis draw. There you go. That was at the 2K. We gave you that once, twice, 3 times, and 4th time wind up a lady. That gave you this big upside move. So that's the history that you have to bear in mind. This is your fiat and debt debasement, and it is accelerating. It's going to be in an accelerating phase, and we discuss why this is the epoch for gold and silver and other things like platinum and miners that will outperform. There is no more legitimate basis of account. Gold is your new basis of account, divided in gold ounces. This will overperform gold for a period at a certain time, still to come, but that may in fact take place. Gold-silver ratio will determine that. You can support our bullion dealers below, pure gold below. Don't forget also our trading platforms. If you want to accelerate your building of ounces in silver and gold, that's what you want to do, then book a link and have yourself a call. Real HVFs, real setups, real technical analysis done on lower time frames. So I'm going to transition. Look at that phrase he threw in there. I'm going to move from this macro time frame and I'm going to go to the lower time frames to talk to you more about what's happened recently. We need to reframe that, rescale that, and talk about it. You see, the liquidity discussion started to come in the frame. We were still open to the possibility that you might have 3 waves of selling. We had an inverted HVF in there that was continuation to the downside. Its target got made. You had a double top. That target got made. All great exits for the subsequent rallies. These were great exits and then bounce back up. But we've actually broken to the upside, contrary to the possible expectation. Short-term continuation. We never short in the macro bulls. We don't do it. We don't try to take both ways. It's confusing. You retain one bias. Yes, it's bearish on a short time frame, but the tide, or let's rather say, the flow of the stream is from the mountain to the sea. We don't spend too much time trying to make money swimming upstream. No, sir. No, sir. 3 bags full, sir. While a couple of eddies may actually have a quiet spell where they can circulate backwards, on the long run you are playing a loser's game. And as a result, we don't take the shorts to the short side. This is broken up nicely. Let's show you some of those draws that we've done. We're also showing that corrections are normal in those legacy arrows there. That was the inverted HVF.
Francishunt examines the 3-monthly silver chart, highlighting key targets and the ongoing bullish trend. He notes the $333 level as the first milestone, likely to be surpassed, with intermittent rests around the 90 and 100 levels. Hunt explains the head and shoulders pattern, confirming a breakout above the $50 mark, which signals strong momentum. He emphasizes the role of fiat debasement and the accelerating demand for silver and gold, pointing out that these metals are outperforming other assets. Technical setups, such as HVFs and lower time frame analysis, provide actionable insights for stacking and accumulation strategies. Despite short-term corrections and potential pullbacks, the broader trend remains bullish, driven by macroeconomic fundamentals, shifts in the gold-silver ratio, and structural market forces. Let's get into the interview.
You can see it there, you can see it there, and then you broke with momentum, strong and then slightly more gradiated. It was a pivot in the inflection, strong up, nearly vertical, then a more like a kind of 50-degree angle to the upside. So you can see these key inflection points as well. Interesting. What does the W give you as a target, as well as the head and shoulders give you as a target? That's what you're asking. You're asking about the future, not the past. I get that. That's what we're getting to. But I need all who listen to understand how we get there. So that's why we draw what we draw, to understand charts. It matters. The more you put in, the more you get out, the more wisdom and the more you learn, the more time you spend in this industry. Eventually, over time, the more competence you build. That's what it's all about. Competence on building probability-based possibilities that could see you benefit from a little bit of price upside. And that's where we are on gold. Price upside is now the thing. No one's shilling. No one's excited about gold right now. But the liquidity is coming, so that's your inverted head and shoulder potential target, which would take you just past the previous highs, were we to use the 4135, this blue line. It might not get there. It might only come to exactly the target and make the target. It's almost there already at 4118. It might go part of the way to 41225. We might be pulling it back. That's okay. Adjusting is fine. We don't know the exact details. If I were a guessing man, that's where I'm putting it. 4135 to start. So that's interesting. Interesting indeed. What about this line if we take it back down to just the W bottom, which was the beginning of a bit of a bottoming process? We had observed that as well. That's why we were watching gold. We said, hey, a W is broken. We knew that. In fact, this triggering event bar was already in a squeezy on a smaller time frame like this. We actually were trading on live trading day when gold started to move at the end, that wick that came back. We were watching that. That was the first test. It's called a break and feign back in. What happens next? The real break happens next. That's what happens next. So this brings you back up the W bottom, which gives you some interim levels where you might pause. The green W neckline over there brings you back up on gold to around these levels. And that is unsurprising because, as you can see, there's a purple line, a pink, let's try again. There's a light blue line in double thick there. That was the M top neckline that you broke with momentum. So what was support for the M can become resistance. So in the journey back up, if we do, this would be my prediction of the future price behavior. Hey, we're trying to do something difficult here, and it can be wrong, but we're trying to be informative too. It could look very much like this. So how do we go? You make this target, you blow off, you just clear the red. You have some form of a downward right shoulder that maybe supports on the second interim level of this squeezy Japanesey, oh so good HVF to the upside. You come back up and you trigger and break. You could have a really impulsive candle on the break, and you could even do some form of a return move and have a bit of volatility before you calm down at these levels, the 4,200 and the 4,206, very close to each other, likely to be run simultaneously, before running and heading back up and making a marginally higher high. I prefer we didn't make a marginally higher high. Maybe these necklines will be a tiny bit lower so that you just get up to the similar levels where you might have a rest. However, at the moment, the way we've done it, it points to 4,400, which is a tiny bit higher than the highs here. The high there was 4,381. However, if that neckline gets adjusted closer to the target of the HVF and down, we may just come and rest here. This is not melt up, go straight to new highs type price behavior. This is working its way back up. This points to a rest round about this boxy region, I think. Points to a likely rest here. So we're going to include that target in there in the boxy region. Points to a rest, and then you might get some comeback down. This isn't ripping. It isn't face melting. It's working its way up.
Francishunt breaks down the technical setup for gold, highlighting key inflection points and the W and M patterns on the charts. He explains how previous support and resistance levels guide potential future price behavior, emphasizing that targets such as $4,200 to $4,206, $4,400 are within reach while allowing for natural pauses and minor pullbacks. Hunt stresses that this is not a melt-up scenario. The market is methodically working its way higher with measured momentum. Using HVF analysis and historical pattern recognition, he projects where gold may rest, how it might trigger impulsive moves, and how volatility could manifest before stabilizing at higher levels. The focus remains on building competence and probability-based insights for informed trading decisions in the precious metals space. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.